Hi guys, welcome back. This is a summary of the episode 2 of the ICT Mentorship 2022. Please refer to ICT original content. This is just a summary for those of you like myself that are going through the material, have watched the videos and want a quick splash, a quick refresh of what he's teaching. So let's get started. I provide you guys with the PDF of these summaries for you to go through them maybe more quickly. If you ever need another refresh, feel free to download them using the link in the description below. In this episode, episode 2, Michael talks about two important concepts: liquidity and imbalance. The price is attracted by liquidity or it is running towards an imbalance. Guys, Michael is really able to keep in mind the different logics and many different actors while he's trading and while he's teaching us. So it is sometimes really hard to follow him, and for this reason I will really try my best to make this logic apparent to us while we're going through the summary of this episode. Michael shifts its talk from the price perspective to the market perspective, to the little investor's perspective, to the big decision maker's perspective, and last but not least, definitely also to the algorithm, so what the algorithm will do in which occasions and how we can read through that. Each perspective that I just mentioned plays a role in how and where the price will move to, but usually we simply are not aware of them. Try to make them more apparent. I love this episode because Michael gives us a very good example of his trading techniques. First and foremost, he goes to the weekly chart where he starts to develop an expectation of where the price will be going, so the macro perspective. Then he drops down to the daily chart, and here he searches for liquidity. Then to the hourly chart, and here he will be searching for imbalances. And last but not least, he goes to the 15-minute chart and the 2-minute charts, where on the 15-minute charts he's gonna be looking for opportunities, and in the 2-minute charts he's gonna be looking for entries. So let's start and see this example of ICT trading strategy. First, on the weekly chart, he starts to develop an expectation of where the price will be going. What is the overall trend? Can we predict if the price will close higher or lower than the previous week? Remember, this is not about being sure at which level the price will close, how much the price at the end of the week is gonna be, just to have a direction. Is it gonna be higher or lower or where it closed in the previous week? So it's really about the direction, not about being super precise about it. After seeing the weekly chart, he drops to the daily chart, and here he starts looking for liquidity. First, he needs to find and see the lower price point of each single day. In our case, the lower, but can also be the higher. It really depends on also what you are expecting. It's even better if few days have actually a same or very, very similar price level, because then it's gonna give us a better expectation of the different price levels that we are looking at. Now guys, always on the daily chart, looking for liquidity, start thinking like a little investor, like how you've been thinking before knowing that ICT was there and that he existed. So as you can see from this graph here, for a few days the price did not go below those red lines, and what a little investor will think is that, oh wow, this is resistance. But pay attention, that's not us, that's what other people will be thinking. And as you guys know, there are many investors that at any point in time they think that the market is going to be bullish, so they believe that the market and the price is going to go up. And those bullish investors will actually place their stop losses right at or right below the red lines and those price levels, because the price didn't go below them and they're gonna think this is resistance. Consequently guys, if you're a little investor and you believe that the price will not go for a few days, for a few hours, for a few minutes below those specific red lines, those red lines are for us some resistance levels, are little investors. And so if the price drops below those lines at any point, it's very likely that they're gonna be closing their positions automatically. They're gonna be injecting money into the markets, and so they're gonna be creating liquidity. Hey guys, still on the daily chart, I'm gonna give you here an example only for visual purposes so that you can catch the concept. Majority of investors use old lows and old highs to place their stop losses when they're trading. And the stop losses will be indeed old highs or old lows of the price. So something that the price has already touched for a few times, maybe has bounced off of them and didn't cross them, even if it looked like it would. Here there is an image, that's my screenshot, that's my example, just to show you graphically that in the first case, when the price bounces off a certain line for quite a few times, then many people will think, oh, this is resistance, and they're gonna place their stop loss under that line. In the second example, they are gonna see the price really like not being able to go higher and dropping down dramatically, and they're gonna think, oh wow, this has to be a resistance level, and again they're gonna place their stop losses when they are selling in that exact place. What Michael has said at the beginning, the price is attracted by liquidity or it is running towards an imbalance. Above old highs in price, we will find buy stops, and below old lows in price, we will find sell stops. So these are actually the levels below and above which we're gonna find liquidity. When the price crosses these lines, money will be injected into the markets. Now let's drop to the hourly chart and look for imbalances. Please, please, please always set up your charts to be New York time, New York local time. Just like save it there, use it all the time. This is something that's very important that he's gonna be touching upon also in future episodes. Divide the different days vertically, especially at the beginning, to get a sense of what ICT is able to see with his bare eyes. At least I'm not there yet, so just like remember that. And now let's look at the price movements of the early morning. As the day starts, the price will form some levels. Then later on the day, it will cross them away. It's gonna go in our case and first cross or take away the lower level, and then it's gonna go up and cross or take away the liquidity from the higher level. This is engineered liquidity. The price makes people think that they know what they are doing, that they know what they should be expecting from the day, but they actually don't. ICT Michael tells us that in that exact place where you see the arrow is the moment in which we should know we should look for shorts. So when we drop to the 15 minutes chart, we are looking for opportunities and we are looking to have a confirmation of what we've seen before. Traders will see 2 weeks at the same relative price level as those ones in red, and they're gonna think, oh, this is resistance. And they're gonna put their stop losses exactly there. So the market will take them out quite right away, and that is gonna create an opportunity for us. When the market and when the price takes them out using their stop losses against them, this is the time to drop to the 2 minutes chart and double check and search for a couple of more confirmations that we need to see before entering the trade, because what we've seen so far is very interesting and it really sparks our curiosity, but it's actually not enough yet to be sure that we're going to be making money by shorting. So we need a couple of more confirmations. On the 2 minute charts, we're looking for confirmations first and entry second. So we can see here that the market has indeed created short-term levels or short-term resistance, as I used to call it in the past, and then it has broke them. And in the moment in which it has broke them, we see that as a break in market structure. And this is what we were actually looking for. So we need to stop a second, take a deep breath and think, what have we seen on the weekly levels? What are we expecting? What have we seen on the daily? Does this make sense with our overall analysis so far? Is it the right moment to actually enter the market? If everything says yes, this is still not the time to enter the position, but we have to go and search for a specific signature to occur. What we are waiting to see is something very, very specific. We are waiting to see a fair value gap to form, and then to see the price tapping into it, entering in it, and then we're ready to enter. So as soon as the price enters the fair value gap area, then we're ready to say, okay, it's confirmed, it is gonna go in the direction in which we thought it would, let's enter, let's do that trade. Now, two big questions: where to put our stop loss and where to actually take our profits, which is the two main questions that come up every time you're about to enter a trade. For the stop loss, Michael says, and you can see it with two huge red arrows here, to put the stop loss above the wick or the candles of the two previous candles before the one that has the fair value gap. Put the stop loss above the wick or the candles of the two previous candles before the one that has the fair value gap. You have to learn to trust the pattern. He said several times in the video that it can feel a little bit weird and you can doubt yourself a tiny bit with that, and you kind of like just need to trust your gut and go with it. To understand better where to put the take profits, and so to understand where the price will actually drop to, we need to go back to the hourly chart. Okay, we are on the hourly chart now, and where to place our take profit. So it's important for us to divide in two parts, so two equal parts, the price range of that day. You can do that with simple Fibonacci retracement, and so our 50 line is actually going to be the midline. Everything above is going to be our premium, and everything below that line is actually going to be and could be considered as a discount. The price will probably touch the opposite side of where we are in that moment. Now think and try to look at what do you see right below the 50% line. You can place your take profit at the line or just below it, or you can look a little bit closer and try to find another interesting signature. Right below our 50 line and our middle point, we have a beautiful, quite interesting and definitely not small fair value gap. The price will touch the 50 line and then touch the fair value gap, and this will allow us to actually maximize our take profits. ICT gives us a beautiful example of how he trades and what's his trading strategy. He starts with the weekly. He starts developing expectations of where the price will go. He drops to the daily chart and looks for liquidity. He drops to the hourly chart and he looks for imbalances. Then he goes to the 15-minute charts, and here he searches for opportunities, and last but not least to the 2-minute chart, and there he looks for confirmations and entries. Now, as homework for the episode 2, he asked us to look at E-mini futures, the intraday charts, in hindsight, and to follow the steps that he had just described in this summary and try to really look, are you able to see what he's seeing? So can you see the fair value gaps? Can you see the confirmations? Can you see why the price has done what it's done? So guys, about the homework that he gives us in episode 2, he asks us to look at the E-mini futures intraday chart on TradingView and to follow the steps that he has just described for us, and look in hindsight if we are able to really spot the fair value gaps, the confirmations, and if are there other possible trades that you would be able to actually check and make with these strategies. Do you see what ICT sees? Are you actually able to grasp a little bit better his strategy and his concepts? Train yourself to see and have faith. It's a lot of work, but it's always going to be worth it. Guys, this is the way. I hope you enjoyed this summary and it was useful for you. It was quite a lot of work for me to make it, so please give it a thumbs up, put a comment below, and keep working, keep doing the hard things, and results will follow. This is the way.